Chartered Bank. A chartered bank is a financial institution or FI whose primary roles are to accept and safeguard monetary deposit from individuals and organizations as well as to lend money out. Chartered banks specific vary from country to country. However, in general, a chartered bank in operation has obtained a form of government permission to do business in the financial services industry. A chartered bank is often associated with a commercial bank. Chartered banks provide core financial intermediary services necessary in today's economy. Individuals can easily deposit their funds into various types of accounts within a chartered bank, earning interest on their temporary savings. Chartered banks maintain a float of currency so they can process customers' daily transactions, but they lend out the majority of their deposit to individuals and commercial borrowers to the economic growth. Chartered bank oversight. A bank's actual charter lays out operational guidelines for the bank, along with how it will comply with relevant regulation. This might include how the bank will maintain a certain minimum capital requirement. In the United States, a charter can be either state or federally issued and conform to either state agency regulation or federal oversight regulations, respectively. The Office of the Comptroller of the Currency (OCC) was created by Congress in 1863 as part of the National Currency Act. The OCC oversees all federal saving associations and the national banks, along with all federal branches and agencies of foreign banks. The OCC is an independent bureau within the U.S. Department of the Treasury and is responsible for approving or denying applications for new charters for national banks and federal saving associations. Examiners from the OCC conduct on-site reviews of banks to ensure the institution operate in a safe and sound manner. The OCC is responsible for identifying risks to the banking structure and can take action against chartered banks for non-compliance, including issuing keys and disease orders and imposing penalties. As of 2022, the OCC supervised 1,109 chartered banks, federal saving associations, and federal branches and agencies of foreign banks. $15.4 trillion. The total value of bank assets held by OCC-regulated institutions, which comprise 65% of all commercial banking assets in the United States. Chartered banks versus online banks. Certain online banks may contain overseas charters. These do not conform to either state or federal regulation. In these cases, the consumer must determine if the online bank meets over Federal Deposit Insurance Corporation (FDIC) protection. The FDIC, created in 1933 to maintain public confidence and mitigate bank failure in the United States, insures deposit of up to $2,500 per member institution. Examples of online banks include Access Bank, Ally Bank, TIAA Bank, Discover Bank, and others. As online banks can cut costs via a primarily digital footprint, many can offer above average deposit rates and high-quality digital offerings to customers. State chartered bank versus federal chartered bank. Cost savings, higher revenues, access to local regulators, and relationship reduction of national banks' powers could see an increase in legal lending limit, which will allow better competition for loans and reduce participation. Possible increase in potential earnings due to cost saving. Gain improved access to local primary regulators and banking commissioners. Versus federal. Ability to open branches in other states more easily. Reduce regulatory requirements over a number of varying state regulators for banks operating in multiple states. Why banks convert to state charter? Some national banks have come to recognize the benefits of converting to a state bank charter. Usually, it's due to these three reasons: cost savings and higher revenues, access to local regulators and relationship, and the reduction of national bank powers. Thank you.